Hey traders, Greg from Trade90X. Hope everyone had a great week. Hope everyone's staying cool. I'm here on the East Coast. Definitely hot weather, so definitely stay cool. But again, remember, we're in June. We're heading into July. There's a little less than 6 months left. So again, if you're not getting the results, then hit us up at hello@trade90x.com. Okay. Again, it's always about the same thing. It's about getting educated. It's about understanding the rules of engagement of the market, how the market works. Okay. Understanding main trend versus short-term trend, understanding the back testing to prove your statistical edge. Everything we do is about having an edge, knowing your numbers, or you're going to fail. Understanding the market context, who has the control. Remember, markets can only be bullish, bearish, or range price action. But again, you need to master that. Also, again, time frames. What is the main trend, monthly and weekly? Anything below that, we call the short-term, trend or price action. You need to understand statistical edge setups within a bullish, bearish, or a range price action. Understanding those entry, stop, and targets, and then routines are a critical part of understanding and staying disciplined. Again, here we're on the East Coast, so we do our pre-market. Typically between 7 and 8 o'clock. This is where we build our plan every day. Live market is between 8 and 12. And again, this is where we execute our plan, but we do not trade into news. And then post market, once we're done trading, we journal and review. And then, of course, now we do our weekly and monthlies. The weekly is to then review the week. And again, it's rinse and repeat. We do this. And again, I do it for you every morning, every week, every month. So again, if you don't understand something, then hit us up at hello@trade90x.com. And while it's available, go to our Trade90X Instagram page profile and book a 15-minute free call. But ask us anything about trading. Remember, I can only lead the horse to water. I cannot drink it. I'll say that every single day. But again, this is our trade plan right here. Again, these are the things for me, these are the only things you need to know. I don't care if you're a scalper, day trader, swing trader, position trader. And again, this is also about not just, trading, it's about building true wealth. Okay. So again, we created that earn the right to trade live process to kind of break it down. Because again, if you don't have a plan, you don't have an edge, you don't know your numbers, you are going to fail. It's that simple. So again, life, business is hard enough. But again, if you understand the information, the rules of engagement, and then you put in the time, and then you're humble, you ask questions, you're around people that have been there, done that, then what's going to happen is you're going to put the odds in your favor. Okay. Nothing is given to you for free and nothing is easy. So again, we have all this stuff on, social media showing the lifestyle and how easy it is. Listen, guys, anything is possible if you put in the work. But if you think you're just going to open an account, get a laptop, and start traveling over the world, you're sorely mistaken. So again, I'm here to tell you that it is possible, but are you willing to put in the work? Are you willing to do what it takes? I'm doing all the hard work for you. All you need to do is now put in the work and dig deep and ask questions and just keep building until you have an edge. And then once you have an edge, this is why I call it the earn the right to trade live process. All right, let's go jump in. Let's go see what the week brought, and then let's see how we're gonna, make some money. Because the bottom line is that's all I care about. Is the process simplified? Is it easy enough? Is it going to allow you to put you in the right situation to make money? Because if not, then you're wasting your time. All right, let's go get this and let's see what's happening. So first thing I always like to do is I like to look at the calendar right here. Where is our chart? Okay. All right. So again, now on the weekends, I'll use Forex Factory. During the week, Econo Day. I don't know why Econo Day on the weekend doesn't show the updated. Just I don't know, it takes until Monday morning, but anyway, no big deal. All I care about is the most important news. We don't trade into news. We let the important news come out, and then what I'm looking for is price to move quickly, momentum, to one of our potential statistical edge setups within a bullish, bearish, or range market. All right. So again, Monday, you've got an FOMC member speaking. You've got consumer confidence Tuesday, Wednesday, new home sales. Then we've got unemployment, global. So we've got a lot of important news this week, PMI. So we've got a lot of, so pay attention. Listen, just understand. And again, I go through the game plan every morning. So we'll review this again. But again, you want to understand what's happening for the week. Now, remember, we are moving into these summer months, so definitely volume, typically is a little bit lighter. Okay, earnings. I always want to know, again, whether I trade stocks or not. What I'm interested in is I want to see if there are some stocks that are, the market's going to be looking at, things like FedEx or, payroll, things like Paychecks or General Mills or Nike coming on it. So again, I just always want to know when there are some important consumer or important, economic stocks that affect the economy. All right. So just pay attention. Next, fear and greed index. This tells us the short-term sentiment. And right now it's showing us more of a bearish bias than a bullish bias. Again, all this data, all it is I'll say it again. Number one, I'm always looking at data and odds and hands just to help understand one thing. Who has the control? Is it bulls, bears, or range? Because the more obvious something is, and remember, can only go up, down, can only go up, down, or sideways. The higher the probability we have a chance to make money. Are we clear? Cool. Again, guys, I'm trying to keep it, simple. The information, there's not a lot of information that we look at. We look at the same thing every day. We build rinse and repeat routines. We know our numbers and we never come in without an edge. Okay. It's the same. Okay. Barchart.com. I'm coming in here, looking at stocks, market momentum again. And what I'm starting to do is starting to look at what's happening. Main trend versus short term. Your 200 day is going to be your main trend. We're still bullish, but you can see that also we've gotten a little bit weaker over the last month. Now, the short term is your 20 and 50. Now, again, if the main trend is up, the highest probability is always using your short-term trend to get in sync with the long term. So we look for pullbacks, and that's going to be your highest probability. Your highest probability for the markets are overall bearish is the main trend bearish. Then where can I use the short term to get in sync with the long term? Now, is there a time and place to do some counter trend trading? Yes, there is. And I'll show you when we get to the charts. But there's a caveat. One, and I say this every day, if you are an established trader with consistent profit, you've mastered the earn the right to trade like process, you've back tested that you have an edge, counter trend trading, then I have no problem with it. But unless you've done that, I highly recommend sticking majority of your trades, sticking with the trend, main trend, and then getting in sync using the short term. Are we clear? Cool. And again, FinViz, I'll show you the same thing. Again, these are things, again, to tell us who have control. Now, this was the cash account. So Dow closed right at the open. NASDAQ closed below the open. S&P closed below. So Russell goes above. So again, definitely, more of a bearish bias in the short term right now. Again, groups, let's go look at the sectors. Again, main trend, 1 year, half year, 3 month, more bullish. Short term is indecision. So let's just look at it this way. So when the main trend is up bullish, I want to see these green because that gives me that confidence to be in a longer term trade than just a day trade or a scalp. But if I see the main trend up and the short term has that indecision, they're not in sync, then I'm going to be day or scalp trading. I don't want to be in a trade more than a day if the main trend and short term are not in sync. Is that clear? Cool. All right. So right now, main trend is bullish. We have indecision in the short term, meaning that, again, we can go either way. So it's not really clear. So I'm going to be more of a short-term trader. Okay. Again, I do what the market tells me. That's it. And that's what, part of the earn the right to trade life process. You learn to break down the market. You learn the rules of engagement. You learn how to backtest to build that edge, to statistical edge. You learn your numbers. You master bullish, bearish range price action. You master the high probability setups. You learn the routines, and then you learn to journal and review. All right, tradingstir.com. Remember, I talk about it. It comes out every Friday, once a week. This site does a great job for free. And what it's telling us is the commitment of trader. All the commitment of trader part is your smart money. Remember, banks, institutions control 85% of that order flow in any symbol. Okay, not retail investors. So what I'm looking at is I want to look at the key symbols like the dollar and gold, and I want to look at, but I look mostly, I just go right to the indices. Okay, so right here, start with the S&P. And again, I don't give a crap what someone tells you on YouTube or on CNBC. I give you the facts, not fiction, okay? So you don't need to listen to them. What you need to do is follow us, look at the information, and learn how to decipher it for yourself to build your own edge. Look, this is 87% of the the smart money is still has a bullish bias versus 12%. So until I see a personality change, the main trend is up. And then I'll go and look at the Dow and NASDAQ. And again, I want to see also if they're also showing that. And if I have the indices behind us, then that tells me what I need to know. Okay. Next, stockcharts.com, a great tool so I can quickly show you the main trend in short term with a click of a button. And again, here are the symbols that not only they make up the market context, but we trade. Now here at Trade90X, we're specialists. We trade the same, 6 to 8 symbols over and over and over. The Dow, S&P, NASDAQ, Russell, maybe some Apple, oil, gold, and maybe one or two other stocks here and there. But typically we're not trading the flavor of the week. We're trading the same thing, and we can position, swing, day, or scalp with these, and we'll either trade futures, options, or we'll just trade the the shares. And that's it. And again, when you're part of the Earn the Right to Trade Live process, we help you what kind of trade around them, what type of trading best suits me, what symbols, what assets. We'll do all that. We'll help you do that when you're part of our process. All right. Now, all I care about here, main trend versus short term. Remember, if the main trend is bullish, then how do I get in sync with the long-term trend using the short-term trend? If the main trend is bearish, how do I use the short-term trend to get in sync those for the highest probability? Now, remember, all I care about is I don't care if it's a 1 minute, 5 minute, weekly, monthly chart. What is bullish, bearish, or range price action? Bullish is lower left to upper right. I talk about it every day. Bearish, upper left to lower right. Ranges, equal highs, equal lows. Okay, now bullish and bearish momentum, whether it's a 1 minute, 5 minute, weekly, or monthly, we look for the momentum into pullback and pauses. Those pullback and pauses are where we find our high probability setups. In a range, I look for equal highs, equal lows. I have no interest in trading the middle of a range. And at the highest probability in a range, if I get obvious bullish rejection at the bottom third, go long, obvious bearish rejection, top third, go short. I play the range until price can break back to either bullish or bearish momentum above and below. But again, if I haven't back tested it, then I shouldn't be trading it. So right now we're moving lower left to upper right and all the key indices. Even Apple is moving up. And then I use my odds enhancers, which are my VIX, 10-year, and dollar. Now, the VIX is my most important, the volatility and sentiment. Again, if that's moving down, that helps the bullish markets. If it's moving up, that's bearish markets. And if it's sideways, then we have indecision. And right now, we're still moving down, but we are at the low end of the curve, and it looks like we're kind of basing right here. So we'll have to keep an eye on that. But right now, main trend is bullish. Short term, same thing. We go, remember, bullish is lower left to upper right, bearish upper left to lower right, ranges equal highs, equal lows. And the more obvious it is, the easier. Like when I mean obvious, so here. So the Dow right now, it looks like it's coming back, but it's a little bit sideways. The NYA, a little bit sideways, but look at the S&P, NASDAQ, and FTSE. You see how obvious that is? Lower left to upper right. That is what I'm talking. Look at Apple, lower left to upper right. That is beautiful. That's what we're looking for. Momentum into pullback and pause. Now, the VIX has been upper left to lower right, but now remember I said it's basing, so we got to keep an eye on that. All right, we got to keep an eye between that kind of 12 and 14 area. Now we start breaking above there, well, that we could see a big pullback. So again, and then I see also the 10-year moving upper left to lower right. Now the dollar's starting to move up, so we'll have to keep an eye on that. All right. So these are the things that I look at. And remember, like here, like look at commodities. It's sideways. I don't want to trade that. Gold, sideways. Look at that. It's like it's choppy range crap. I don't want to trade that. It's either obvious or don't trade it. Move on to something else. So right now we're kind of mixed, but you can see the Dow's starting to come back. So we'll keep an eye. So for me, even though there's some indecision, I'm seeing a little bit more bullishness. So again, we'll keep an eye on that. So now that we understand what's happening, let's just go to the chart. So what I like to do is now during the week, I only do the indices. Now this is the weekend, so I'll do a little bit longer because I want to make sure I get all the symbols in. All right. So first thing I'm always going to do is I'm going to look at the main trend, the weekly and monthly for me. And again, all I care about is it bullish, bearish range, or we just have no edge. Can't figure it out. So remember, bullish is lower left to upper right, bearish is upper left to lower right, range is equal highs, equal lows, and I have these momentum bands. I have two short-term momentum bands and the 200-day. Nothing magical. Well, the reason I do this is because I notice a lot of traders visuals help. So here, if the short-term momentum bands are sloping up, that means we're bullish. Now, if they're sloping up and they're above a sloping 200, now that's the highest probability. Same thing with bearish. If we have sloping down, the bands are sloping down, and the 200 is above sloping down, that's your highest probability bearish. Again, all I'm looking for is the highest probability to take our edge trades. Now, a range is like this. It's equal highs, equal lows. Okay? So whenever you have a range, what I do is I get in there, equal highs, equal lows, right there. I don't want to trade the middle. Okay? So what I look for me, I look for those obvious break and retests. There you go. Okay? Now, if this would have done this, then we have a personality change. All right? So all your job is understand the main trend. Is it bullish or bearish, or is it in a range? Well, the main trend right now for S&P is bullish. Okay? So if I'm a bigger time trader, say I'm a position trader, I'm going to be looking for the same thing I am in a 1 minute. I'm looking for momentum into pullback and pause for bullish or bearish trades. Now, range trades for me, this is just me, I like to see those clear break and retests. All right. Now, bullish momentum. I'm looking for bullish momentum at or above. And if you want, you can use a line chart to even help you. Then go to the candles. And then I'm looking for very specific candles. So if I get momentum at or above, I'm looking for green engulfing candles, pin bar candles with the wick on bottom, or I look for dojis back into those two candles. All right. So if I'm looking at this chart right here, I'm a big time trader. I'm looking for momentum into pullback and pause, engulfing. Momentum, here you go. And right here, you have a engulfing into a pin bar, momentum into pullback and pause. Now remember, I want to close at or above. So here, with three areas where if I'm taking bullish momentum trades, those are excellent, excellent trades. Okay. And the momentum bands are here to help you with the long-term band, give you the highest probability trades in the time frame that you're trading. Because remember, if you're trading a month and weekly, that's going to be more for position trading. Position trading months to years. Swing trading is going to be, days to weeks. And then, of course, scalping is going to be, seconds to minutes, flat at the end of the day. Day trade is minutes to hours, flat at the end of the day. All right, so now we go to the daily. And again, ask the questions. Are we bullish, bearish, in a range? Okay. Now, we're moving lower left to upper right. The bands are sloping up, 200 sloping up. Perfect. Where are the momentum into pullback and pauses? Momentum into pullback and pause, where you get the candle that closes above. There's your engulfing. Momentum into pullback and pause right there. So for me, these were the best setups. Okay, these were the best setups at or above. And then again, when you get in part of the Earn the Right to Trade Live, we'll get more into those entry stops. Right now, all we're trying to decipher is, are we bullish, bearish, range? Do we have a high probability setups? Now, again, numbers. I give you the numbers every day for active trading. We don't risk more than 0.5 to 2% of our capital per trade. We don't risk more than 3 to 5% of our capital per session. We don't look at trades unless they have a minimum potential of at least 2 to 1 and higher. Why? Because again, this is a plan that'll give you capital preservation. It'll help you scale. And if you don't know your numbers in business, you are going to fail. All right, now, so the main trend is going to come from your monthly and weekly. Your intermediary trend, I'll use anywhere from a 5-minute to daily. That 5-minute to say hourly, or 5-minute to 30 allows us to see inside the daily candle, and it allows us to get more precise. Now, I'm going to show you how to do the same thing, and I do this every day. And this came from you guys asking me for a little more simplicity. So like if you have 1, 5, or 10, symbols, you can quickly look at them in the morning or post-market to determine, hey, main trend versus short-term trend, and how do I get in sync with that main trend using our strategy. All right, so our strategy is called the Earn the Right to Trade Live process, but this is the Earn the Right to Trade Live process one chart strategy. And again, in any good strategy, you have to understand how the markets work, the rules of engagement. I give it to you. Number 2, back test to build an edge. We show you how to do that. 3, know my numbers. I just told you the numbers. 4, understanding the market context, who has control, bullish, bearish, or range price action. Next, the statistical edge setups within a bullish, bearish, and range. And then, of course, no edge when the price is no movement or momentum. You sit on hands. And then, of course, when you're done, journal and review. Now, for me, also in a good strategy, I like having a set of tools that are predictive, not lagging, and can quickly help me determine, are we bullish, bearish, or range in the short term. Okay. Now, these tools right here are off the shelf, and the beauty is they are here before we get started, not after the fact. And those tools are the following: the yearly high low in gray, the monthly high low in orange, the weekly high low in purple, the high and low black. Previous day's range gives us our short-term bias. Here's the midpoint. Here's the open in blue and the previous day's close. And then this yellow line is the start of the week, and you can see the days on the bottom. All right, so now that you know the tools, let me show you the setups. So again, the setups that we're looking for, the tools quickly tell us short term, are we bullish, short term, bearish, or range? So this tells us we're bullish, above the previous day's range, tells us short-term bull bias, and I want to see clear, higher highs, higher lows, momentum into pullback and pause. Below the previous day's range, I want to see this. Sorry, wait, hold on. I want to see lower highs right here, lower lows, and that tells us we have strong short-term bearish momentum. Lower highs, lower lows, momentum into pullback and pause. Anything inside the range tells us we have a neutral bias day. Remember, ranges, bottom, middle, top. I don't want to be near the middle. What I'm always looking for is this. Again, if we're going to have that, continuation trade above, I want momentum, clear momentum into pullback and pause, clear momentum into pullback and pause below for bearish. And then inside the range, I want to see this. I want to see strong momentum rejection at the top third to fade down to the bottom, or, here. I want to see strong momentum rejection to fade back to the middle and top. I want to see strong rejection, fake out, breakout, wait for the turn to fade down to the middle or bottom. I want to see strong fake out, breakout up to the middle and top. And if we have sideways crappy price action, then what I want to do is I just want to box it. I literally, remember, when you're part of the Earn the Right to Trade Live, you're going to go through hundreds and hundreds of charts, back testing to prove your edge. And the tools and going through this process is going to help you master the main trend versus short-term trend. And then using the tools, it's going to quickly tell you Are we of short-term bias, bullish, short-term bias, bearish, or a range? Okay. Now, inside the range, do we have that strong top third, bottom third rejection, fake out breakouts? I don't want to trade the middle, or do we have chop, no edge? That's all I'm looking for. And then I wait patiently for that A setup. Now that we understand the setups, we know the rules of engagement, what I'm talking about. We know that back testing is key. We know the numbers. We know market context. You know the setups. You understand the tools. Now let's put it all together. It's a three-step process. Number one, in the Earn the Right to Trade Live one chart strategy, I go to the weekly first. Why? I want to see what the bigger main trend is telling us. It's moving lower left to upper right. Again, it seems simple, but you need to learn this. Then part of that step number one, I take a red horizontal line and identify where the most obvious red and green candles are, where price is taken off. I call these decision points. They come from the monthly and weekly, and they're very important. Okay, but we are bullish. Step two, I go to that 30-minute to start looking inside the daily candle. I have my decision points. And then, of course, I have my previous day's range. I've got my weekly, monthly, yearly, and decision points. I squeeze the chart up. I look from week to week, and I can see that we're moving lower left to upper right. That means that if the main trend is up and the short term in sync, now that's the highest probability. Because remember, when the main trend is up and the short term is up, the highest probability is looking for where I can go long. Anything else is going to be counter trend. Now, once I look at this, what's been going on for the week? I want to see what's been happening. Well, we started in consolidation. We broke out, went back to consolidation, tried to break out, and then failed. And now we've kind of have this consolidation. Now, if we break above or below the previous day's range, I'm always looking at those weekly, monthly, yearly decision points as very high probability targets. Now, if we have, like you see right here, if we have the weekly, monthly, yearly decision point, close or on top of the previous day's high or low, that means that we have a much stronger potential, level or zone there. All right. Now, step three, I'll use anywhere from a 1 to 10, 3 to 5 minute works for me. And again, I'm just doing that so I can see inside that daily candle with a little bit more structure, okay? But I never lose track of what the main trend and short-term trend is. Then the short-term, our tools tell us, are we bullish, bearish, or range? Well, we're in a range. So what is the setups I look for in a range? See, when you understand, you come in every day and you have control and you know what you're looking for. We're not above, so we're not bullish momentum. We're not below for bearish momentum. We're in the middle of a range, so I don't want to really trade the middle. What I'm looking for are those clear, strong, top third, bottom third, fake out breakouts until price can break back to bullish, bearish momentum. So here on the S&P, I mean, look, we're basically in a choppy range all day Friday. Now, remember, if there are no trades, there are no trades. Do not force a trade. Listen, some days there'll be 10 trades, some days there'll be 5, some days there'll be 1, some days in all the symbols, there could be nothing. Again, if you do, I'm going to say it again, and this is why the Earn the Right to Trade Live process is so important. When you learn to master the rules of engagement, understand what high probability statistical edge setups are, perfect. All right. Now, once we see this sideways chop, for me, not much we can really do. Now, if you want to go down and potentially scalp it, that's fine if that's part of your trade plan. And the only trade that was even remotely a setup was this one right here. Because remember, so we're building our routine. Our typical plan is between 7 and 8, we build our plan. 8 and 12, this is where we're looking for our, high probability, trades. There we go. And again, now, if the afternoon was something that is part of your plan that you do all the time, then this would have been an area. And again, these are momentum, rejection, trades at the bottom third. And where am I looking for? Well, this was the top of it. So here's the thing. I'm going to look at this. Do I have 2-to-1 to this most recent target? Yeah. So this would be a trade that I would consider. Let's look at this one. Now, for me, I always do structured stops. I want to be below on a long, the most recent candles, and I want to have a key level to work off. So I'm here, and then the target is back in this area here. So this one gave you your 2-to-1. So as long as I have 2-to-1, no problem. But again, if I'm not somebody that wants to go down to a 1 minute, then tough. But anyway, these were the only trades on the S&P, and these were scalp trades. And why was my potential first target right here? Because this is where the open was. This is where price, came back down, and we kept rejecting at this area. So not a lot of space. Okay. Not a lot of space to maneuver. So if you don't understand, again, bullish momentum, bearish momentum ranges, and then understanding the highest probability, then you're going to be lost and you're not going to be taking high probability trades. And you better hit us up at hello@trade90x.com. All right, let's go through the NASDAQ. Now that we understand, now we can run. Remember, once you understand how to do this, this can move really quick. Okay, I'm doing it slower because I want you to get it. All right, step number 1 in the NASDAQ. Remember, this process allows you for your position, swing, day, or scalp. Because here, momentum into pullback and pause. Okay, momentum into pullback and pause. We're moving lower, left, up, right. We're a bullish. Where are the prices where we had the most recent red and green candles, where price paused and took off? Right here. Now, I'm going to put one at the top since we're starting to get a little bit of a shooting star. All right, now we have that. Let's go to the 30 minutes, step 2. Squeeze up the chart. What's been going on? We've been moving lower left to upper right in the NASDAQ. All right, so this week we can see, and I break it down, and then I also want to understand, because I want to see what that week is doing. Here was your high of the week. Here was your low. That's why I said these weekly, monthly, yearly decision points is critical, because we basically were playing within the weekly high-low. Then we look at the previous day's range each day. And remember what I told you, whenever you have levels using the weekly, monthly, yearly, and daily on top of each other or close, I just turn them into a zone, because it allows me to understand that we have multiple. All right, so now we can see that NASDAQ, even though, main trend is up, short term has been more bullish than bearish in range. So the highest probability, remember, are going to be bullish trades. Anything other than that doesn't mean you can't take them, just need to understand the difference between going main trend and short term getting in sync. And am I taking a counter trend trade? And if I do take a counter trend trade, remember what I told you, I prefer that you have been a profitable trader with our process for a period of time, and that you also understand that counter trend has lower probability, but it has to be back tested to show you have an edge. All right, so basically NASDAQ was the same thing on Friday. Basically, all we did, came back down, went sideways the whole day. So again, if I go down to, again, a 1 minute chart, and this is something, again, remember, we're trading here between 8 and 12. Again, unless you're somebody that is, again, prefers the afternoon and you've back tested all that, no problem. And again, this was basically your trading range for the session right here. So for me, using our range, we had what's called the fake out breakout right here. Sellers tried, failed, buyers came back, and these were 2 areas that you could have gone long. And again, what are our targets within a range? Minimum of 2-to-1. So again, if this from here, to this open right here is where we kept rejecting, and because we don't know if it's going to break above, but right now that was our space. So if that gives you 2-1, then I'm okay. But then if we broke above, your targets potentially were the middle and top, and then we came back up and failed. Then you had double rejection. So if you're an afternoon trader, then these are two areas that were possibilities. But again, remember, these were just scalp trades. Okay, these are just pure scalp trades. All right, so that was NASDAQ. And then again, we come in every morning and we rinse and repeat this and get prepared every day. Remember, every day we come in, we anticipate based on what the charts are telling us what we're looking to do. What is the main trend? What is the short-term trend? And then where can we get in sync with that main trend using our tools? And if we are going to counter trend, we know the rules. Number one, again, I'll say it again, we are a profitable trader. We understand the main trend, counter trend probability, and we've also back tested it to prove we have an edge. All right, step number one in the Dow, go to the week. Again, what is price doing? We had bullish momentum, then we had consolidation, and now we're bullish into a range. So we're still have more of a bull bias, but now we have a range. And again, what do we do with ranges? I literally take my decision points and I box the top third, bottom third. I don't want to trade the middle. So if I was a position trader, I'm looking at bottom third, fake out breakouts, or price breaks above for the highest probability, going with the overall trend. Now, short-term trading, main trend is, again, has more of a bull bias, but we know that it's been in a range from these areas here. And if I want, I can just do this just to let me know that in the bigger time frame. And the bigger time frame, I'm always using the red line. Shorter term, I'll use the blue. Now, let's see what's going on here. Well, we've been in a range. So what I'm going to do is I can see clearly this is kind of the top of the range. This is kind of the bottom. And this has been going on for weeks. All right, what is the short term telling us? Short term is telling us that we're in a range. We're in the, remember, here's the middle, the bottom, top third. All right, let's go to the 5-minute. And we can see that the Dow is in a range and it's been in sideways choppy price action. There's nothing even to, I wouldn't even waste my time. This is not something I would even trade. All right, next, Russell. Again, guys, this is what happens. You do your work. You understand what you're looking for. And then if you don't get your setups, then you pass. All right, here was the Russell. This is the weekly chart, step number one. I can see that we've been in one big range and we're sitting here in the top third right here. All right, we're literally sitting in the top third here. And what I like to do is I box those equal highs, equal lows, and then I use the blue for the range expansion. So until we can get above these range expansions, we're in a range. And right now we're just in a bunch of chop here in the top third. But again, ranges, bottom third, top third, fake out breakouts. Now, the Russell is actually in an overall range. The actual main trend is an overall range. So when you have the main trend overall range, then even in the shorter term, I have no problem going both sides. All right, so what's been going on? Squeeze the chart. Well, we just kind of go back and forth, and we know that we're in the top third of that bigger range. So short term, using our tools, what's been happening, and, again, bearish the week before. This week, we kind of bounced off the, some key levels. Again, those weekly, monthly, yearly high, these are important levels. Now, using the tools, tell me what was going on this day. This is the whole week right here. Momentum into consolidation. So for me, this has more of a bullish bias. Are we above? Are we below or inside? Let's go to the 5-minute. And we can see that we're not above. We started inside. And look at this. No edge, choppy price action at the open. Now, what we did have was a very nice, let's go down to, again, this happened, again, within our sweet spot. You had, looks like the sellers, you had a fake out breakout. You had your bullish engulfing. So there was your setup right there. But you can look left and we can see, until we prove it, these were kind of our, so you had this range right here, and this was basically was our playing field right here, and here, until we broke out. So as long as we had a potential for at least 2 to 1, then I don't have a problem with this trade. But you got to understand the overall price. Okay, you got to just understand bullish momentum, bearish momentum, range price action. And then once we're in the range, do we have strong momentum rejection, top third, bottom third, fake out breakouts? Where is the spacing, the momentum? These are all things that you'll master in our process. Okay, let's continue. Let's go through. Let's go to oil. All right, so same thing, rinse and repeat. Go to the weekly. Again, we're looking at the main trend. A lot of chop here, but looks like we have a range, equal highs, equal lows. There we go. So again, we're basically, the range is our main trend in oil. And again, we always look at the range. Again, top third, bottom third, fake out breakouts until price can break out above, below. And we're kind of sitting in the middle of the bigger range. Let's go in the shorter term, because if we are more active traders, then we'll find something. What has oil been doing the last few weeks? It's moving lower left to upper right. All right. So what has it been doing this week? It's been more bullish. Then we'll use our tools, and we can see, I can just see we had a fake out breakout. Let's go to 5-minute. All right. So we basically started in the range, just choppy, no edge price action. Remember, the open in oil is at 9 o'clock. And you got a nice trade. Look at what we had here. Just remember, overall main trend is a range. So when the overall main trend is, I don't mind going both sides. So right here, look at this. It looked like the buyers had it. Here, if you want to go a little bit lower, 3-minute, get a little more structure. The buyers had it, double topped. And then we got the break and retest, which is my favorite trades off key levels. But this area right here, these were the best areas definitely to look for those trades. I'm always looking for those big, strong parabolic moves and rejections. And this is definitely one of them. And then where will your targets be? 2 to 1 or the middle or bottom, and you got all of them. So oil gave you a fantastic setup, much better than the indices. Let's go to gold. Again, these are the ones that you guys send to me. These are the most highly traded symbols. All right, gold. So we can see that gold in the main trend has literally been in a range for 4 years. Go get in there, squeeze it up, the equal highs, equal lows, and then put your range expansions in. We can see we were in a range for 4 years. Now we broke out. It has a bullish bias, but now we're back into that consolidation. So what do we do with ranges? Well, the main trend is up. So our highest probability trades are going to be bottom third, fake out breakouts, or until we break back to bullish momentum. Everything else is counter trend. Okay, but we understand what we're looking at. All right, let's go shorter term, see what's happening. So 30-minute. We have our key levels already in, and we can see gold has definitely been very rangy, over a period of time. And we have our decision points, top and bottom. So we know that, we're in a bigger range, bottom, middle, top. And then if we break up, we're getting back to uncharted new bullish territory. If we break below, counter trend, but we could have a target down here. Or again, in the bigger trend, we use our tools. All right. So what was going on here? Well, we can see during this week, basically, we had consolidation breakout, but then we failed. Gold opens up at 820. Remember, we're coming in between 7 and 8, building our plan. We like to trade between 8 and 12. I don't typically like to trade at the open. I like to let it settle. But again, the tools tell us everything we need to know. We know that bull bias is definitely is the higher probability. If we counter trend trade, I'll say it again, it's because number one, we're profitable traders. We've back tested that we have an edge counter trend trading by using the tools. If not, we do not do it. But here it is. Look, you've had multiple rejections. Now remember, anytime you have key levels on top of each other, make them into a zone. And again, look at this. We keep rejecting at the top third. So these were areas, these two right here. Now this one is overnight. This is where right after the open, this was our trade. What did we have? Again, analyze it. Main trend is up, but we're in consolidation in the main trend. Okay, short-term trend has been going sideways. It tried to break out and then it failed at a key multiple level zone. You had multiple rejection using the tools. We knew that this was more counter trend, but if it fits our process and the tools, we had multiple rejections at the top third. What are our targets? 2 to 1, middle and bottom targets hit on gold. So gold and oil definitely had better setups than the indices. And again, that's what I'm going to be looking at. Let's go to the euro. You go to the euro, and then I'm going to do Bitcoin and a few stocks, and then we'll get back to our weekend. Guys, I hope you guys are getting value on the weekend. I know it's a little bit longer, but again, I want you guys to be able to get this process. And the only way I can do it is really hammer it home with examples. So here's your euro. So the euro, very choppy here. I mean, this is sideways price action. Range expansions in blue. There we go. And again, we know what to do with ranges. If we're a bigger time, doesn't matter. Again, ranges. All right, so we know we're here at this bottom of this bigger range using the tools. What's been going on over the last week or two? Well, lower left upper, lower left to low right. We're more bearish. So the higher probability is me looking for pullbacks to short. Anything else is counter trend. Let's go to the 5-minute. And we had an inside day, and then it broke down and then hit target weekly. Not a lot of setups, though. Didn't really get my, let's go here, breaking. All right, yeah, we go. So that was your setup on the euro right there. But that happened in the overnight, didn't happen. That was the only setup. And then the rest was just crappy nonsense. No reason to trade it unless you were an overnight trader right there. All right, so nothing on the euro. Let's go to Bitcoin. Again, I don't care what asset class you give me, it's the same process. All right, so what is Bitcoin doing? All right, so basically we were bullish. We had this big parabolic blow off, bearish. What does price do? It starts to consolidate or accumulate. And then we're moving lower left, upper right back into consolidation. So right now we're in consolidation, more of the bull bias. What do we do with ranges? Equal highs and bottoms. We don't trade the middle. The higher probability trade right now in the bigger time frame is bottom third, fake out breakouts until we break out. But also, if we do break above, we're looking at new uncharted territory. If we break down below, then what I can look at is where were other areas where price paused and took off quickly here and here. So that would basically be, 40 and 50,000. All right. So now if we're shorter term Bitcoin. We now know we're inside the bigger range. Let's use our tools to see what's going on. And we can see we've been drifting down the last week or two. So it's definitely had more of a bearish bias inside this bigger range. Let's use the tools. All right, so remember, this is today because Bitcoin trades. So this was yesterday. So if you were a short-term crypto trader and you understood, okay, we're in this bigger range, we're trending down over the last few weeks. Are we above the previous day's range? Are we inside or below? Well, we're not above, so there's no short-term bull bias. Right now, we have a short-term, bearish bias inside that range. And for me, this was again, this was the overnight. And then really sideways, just crap all day. Really no trades yesterday. All right, so yes, this is right now. So we're basically sitting in the middle of a range. We're sitting in the middle of a range. So what do you think the setups were? If you're somebody who's just, likes to trade, shorter term. So for me, you have a range. Okay, I don't trade the middle of a range. Until price can move above or below, we're in a range. So what are the trades I'm going to be looking for? Strong momentum rejection, top third to fade back to the middle and bottom. Strong rejection, fade trade to go back to the middle or top. Strong momentum, fake out, breakout, wait for the rejection, back to the middle or bottom. Strong momentum, fake out, breakout, and then reject. Those are the trades I'm looking for until price does this. And this is what we look for every day. And if it's not obvious, we pass. But again, so far, gold and oil, if that's part of your plan, it's been part of mine, those were the best symbols to trade. Now let's go look at a few stocks, the ones that everybody wants to look at. Apple. All right, so we go to the weekly. Look at what Apple has done in the main trend. This is why you have to understand the main trend versus short term. Otherwise, you're going to get lost in the forest. I don't care if you're a scalper day trader. I want to know. We had momentum into consolidation. Mark off that consolidation. And now we're breaking out. And we do have a short-term price, but we are bullish. Make no mistake. Step two, let's see what's happening over the last few weeks. And we can see we're moving lower left to upper right. And then, of course, this week right here, we've been kind of in a range, even going back from last week. So we know until we break the range below, and then here we have multiple levels. We have previous days, we have a weekly and monthly right above the previous day's high. Okay, let's go down to step number 3, the smaller time frame. Now on stocks, I'll use probably like a 2-minute because we're not using overnight data. And then look right here. This whole week has been drifting down inside the range. So what are we looking at? Remember, the main trend is up. The highest probability is going to be bullish. Anything other than that's counter trend. And again, I'm going to say it again. I am okay with counter trend trades if you understand the rules of engagement and you back test it. So let's look at the week. On Monday, we had a beautiful bullish continuation trade, both main trend, short term, and sync. Here, we had a counter trend day. And then here also, with beautiful setup. So Monday and so here's Monday, Tuesday, Wednesday. There we go. It's the whole week right here. And then yesterday right here was kind of crappy. You basically had no edge, in a range, sideways crap. And then just at the end of the day, it broke down. But really, no, this is not what I want to trade. You don't want to trade this crap. What you want is movement. movement. Beautiful, right there. Movement. You know, that continuation, that movement. You know, we're looking for those momentum. Like, you know, if this happened earlier in the day and we had this, now we're talking. All right, let's go look at NVIDIA. I'll do a few more. I'll just do the top stocks. Again, rinse and repeat. Step number one, go to the weekly. We're bullish. We're moving lower left upper. We know that. NVIDIA, everybody in the world knows that. Where are the areas where price is now paused and starting to leave quickly? Just going to put that because we potentially have a shooting star in there. So right here, red doji, boom. Red and green candle, boom. All right, let's go to the 15 or 30 minute, and we can see the video we know over the last few weeks, no doubt. And now we can see these decision points right here. We can see our shorter term tools, but we can see that NVIDIA this week hit very key highs and decision points and has been pulling back. All right, let's go to the shorter term. And we can see consolidation day, breakout day right here. I'm just going through the week here. And then we had rejection, counter trend. And then yesterday, we had same thing, counter trend, because the main trend is up. But using the tools, again, I'll say it again. The only reason I do counter trend sometimes is because number one, my trading is profitable. I back test both going with the trend or against it. And I know that in certain situations, using the tools, I can get an edge. But again, I'm not doing these for swing trades. Typically, swing trades, days to weeks, I want when the main trend is up, I want to take trades that are the short term and main trend are in sync. If the main trend is bearish, same thing. I want to be bearish. Now, my counter trend trades are typically going to be day and scalp trades using the tools, but then looking at the overall week to just help my odds. And again, if you haven't back tested it, then don't do it. And if you need help with that, again, just hit us up at hello@trade90x.com. Let's go to Amazon. I'll just do one or two more. Just doing the ones that most highly requested. All right, same thing. Go to the weekly. What's been going on? Well, you had this consolidation, bearishness, consolidation. Now we're lower left, upper right. Now we can see the red and green candles. We've definitely had some consolidation here. Amazon's kind of consolidating, but with a more bull bias. Where are these red and green candles? Right here and here. So we're basically in a range right now. We're in consolidation with a bullish bias. So we know that if we're swing trading, the highest probability is going to be bottom third, fake out breakouts until we break out. All right, let's go down to the shorter term. What's been happening? And we can see over this last few weeks, momentum, and then a lot of consolidation. We have these decision points with our other levels, kind of range bound. But again, remember, highest probability, because the main trend is up, is always going to be bullish. Anything other than that, it's going to be counter trend. Let's go down to the 2 minute. So this was on Friday. So remember, we opened up in a kind of a choppy range, sideways range. And the only really good trade that I, see those were the areas. Why? Because we had a bull bias until proven otherwise. We were above the previous day's range, and then we had multiple rejections right here. So this was the area that I'm looking at. And again, when we got here and turned, you would have gotten out of this trade. And then if you were an afternoon trader. So that's it again. And will every trade work out? No, this is why you backtest to prove that you're building an edge over time. So if you have that edge over time, you know that again, this is where the difference between successful and failure is. You know that over a period of time, you're going to win. All right, let me just do, I'll do meta and that's it. Again, all right, here we go. What is price telling us in step number one? Bullish, bearish, or range? Well, we're lower left, upper right. Now we can see where the red and green candles are, where price paused and took off quickly. We'll just here and here. And again, we're kind of in this pause area from 426 to 529. And again, we know, again, I don't want to be in the middle. If I'm a longer term trader, bottom third fake out breakouts until we can break above. Highest probability. Let's go to the in a 15-minute, and we can see that meta over these last few weeks. Here is your high, here is your low. And we know we're in this kind of bigger range. And then now inside the range, we've been kind of more of a bull bias. All right, using the tools, what's happening? Go to 2-minute. And we can see this week, meta has been kind of drifting down inside that range. All right, so now what do we got? So this was yesterday. We weren't above the previous day's high. We started inside the range. And the only setup that I see was counter trend, and it was this. See, look at this. Momentum, and then we got the rejection. That was a beautiful trade once you master price action, but you understood that this was counter trend. But using the tools, because we got, a really nice trade out of it. Again, I want movement. So here, look at this. This was Monday. Look at that. We had a fake out breakout. Boom. And because the main trend is up, that's a high probability trade. Then Tuesday, no, we had rejection, but look at this, multiple rejections at the bottom to go long. Chop, nothing to do here. And then this day, again, we had chop, but then we had break and retest. So I definitely like that trade. All right. Let's end this now. Let me clean this up. Let's go back here. All right. So let's recap. Number one, we look at the news. We don't trade into news. Earnings, you got Nike, you got Micron, Paychex, FedEx. Those are important stocks. Short term, it definitely is showing a little bit more bearishness. Main trend, again, bullish. Short term has more of a, based on the data, a little bit more bearish bias. Sector information, long-term bullish. Again, that indecision, again, we see in the short term. The main trend is definitely up. Again, looking at that shorter term, main trend versus short term, main trend is up. Shorter term, SPY, NASDAQ, and FTSE definitely lower left, up, right. Dow starting. So for me, we'll keep an eye on this, but a little bit more bullish bias even in the short term based on the charts. Okay. Then when we went to the charts right here, again, I showed you how we look at the main trend monthly and weekly. And then I showed you the odds enhancers using the momentum bands and the 200 for visuals to help you take higher probability trades. And then again, our intermediary trend anywhere from say 5-minute to daily. And we used anywhere from that 5-minute to whatever, 60-minute to see inside that daily candle. And then using our tools, using the one chart strategy, 3-step process, we can use one chart to quickly look at the main trend, the intermediary trend, and then move down to kind of a 5-minute using our tools to figure out, again, what are the highest probability trades. Again, main trend is up. We're looking for the highest probability trades to go long. Anything else is counter trend. And remember what I said about counter trend, as long as you're a successful, proven trader, you've back tested the counter trend, and then understanding the tools and master that, and then time and place. Like I told you, counter trend for me is typically only when I day and scalp. On the swing trades, I want to be in sync, short term and main trend for the highest probability. Are we clear? Cool. All right. With that said, if you have any questions about how we break down, again, whether, our weekly routine, we broke down the data, we broke down the strategy. We always go through the steps, the numbers. I went through a bunch of symbols showing you how we break down the charts and prepare. And then we come in every morning to then build our new plan. But again, if we don't understand what's going on, then you're just flying blind. So again, hit us up at hello@trade90x.com, ask your questions, or book a 15-minute free call going to our Trade90X Instagram page profile. All right, let's go enjoy the weekend. It's a beautiful weekend here. I can only speak for us. I'm going to go enjoy my weekend, and then I'll be back with you Monday morning.